Okay, all right. Well, let's get straight then to discuss about stocks. Siddhartha Khemka, Head Retail Research at Motilal Oswal Financial Services, joins us on the show. Hi, Siddhartha. Good morning and good to see you. Well, we're waking up to a lot of cues this morning, but let's focus on the top stock for the first half of trade, Infosys. Numbers are a little bit disappointing. The guidance is, well, quite tepid. However, a couple of statements with regard to the BFSI that it will see a bit of a pickup and some kind of optimism in terms of deal wins as well. That's what could support the stock. Your view if it opens up down 2-3% as the ADR suggested?
Yeah, so very good morning, Nigel. I think we have been talking about the macro headwinds in the near term for the IT, and that was clearly laid out by Accenture some time back. The street definitely got some euphoria after the TCS results, which were better than expectations. But if you look at what Infosys has done is clearly that the near-term weakness consists and more importantly, FY25 guidance cut. That is something that the street was hoping for, that things would start looking up 1 or 2 quarters down the line. That is not happened, and that is kind of dampened the sentiment that there could be some recovery in the later half of the financial year. So things would remain calm for some more time is what clearly Infosys is guiding. Nonetheless, if you look at the longer term picture, I think there is still some hope for growth. We have also cut our estimates by about 5 to 6% for FY25 in terms of the muted growth. And we believe that one needs to definitely wait out for more clarity. Within IT, there are other segments or pockets. For example, some of the mid-cap or the tier 2 IT players, some of the ERD players, product development companies, which would report better growth, and one can focus on those segments.
Any signs that Infy is close to a bottom, Siddharth?
So yeah, Rima, if you look at in terms of valuations, I think it's closer to its bottom, but I think 1 or 2 more quarters of weak numbers, and if the guidance continues to remain weak, we could see some more time correction. So the fear is not of price correction that much from here. On the other side, if 1 or 2 quarters down the line, if they increase the guidance, I think then street would start looking up. But as I said, it's more of a 1 or 2 quarters of wait and watch for the global macro situations, which is not looking that great. If you look at what the US Fed commentary is or the economists' expectations, the rate cut is getting delayed, and that shows the economic picture in the key markets of US and Europe, which continues to remain grim as of now.
Names like ONGC, etc., Sid, what's the, it's a big jump. I mean, it's the most kind of sort of natural response. Day before, I mean, we've had big move up on oil and big move up on ONGC. We got an upgrade as well early when we started the week. And then you had a slump as oil fell from 91 to 87. And this morning we were back up at about 91. So these are very short-term sort of moves here. But any thoughts? ONGC and actually the entire complex, oil marketing, the standalone refiners.
Yeah, so Prashant, I think so we have been positive on the entire oil and gas space, especially the upstream oil companies. We believe that after a couple of years now, they are entering into a structural upcycle with increase in production volumes and stable crude oil prices. So definitely today, with the global news flows, crude price jumping up, we will see some interest coming back to the upstream oil companies, the likes of ONGC and Oil India. But if you look at the core fundamental thesis, it continues to be primed on the volume uptick that these companies are able to do. And the stable crude oil prices at about $75-80, they kind of make good money. If you look at some of the other, production growth is something that is helping newer production wells. For example, Oil India, 3 new oil wells in the Andaman the Andaman and Nicobar Islands. These are shallow production wells, will be commencing production by mid of 2025. That apart, if you look at again Oil India, the Numaligarh refinery capacity is being ramped up aggressively from 3 million barrels to 9 million barrels. So these things would be something that we are definitely looking at from a long-term structural story for the upstream oil company. So we continue to remain positive on both ONGC and Oil India. But at current valuations, we have a higher upside for an ONGC. Oil India has seen a ramp up in stock prices in the recent times. But as I said, again, view is positive on both ONGC and Oil India.
Siddharth, Bajaj Auto's numbers continue to be fairly impressive. The company has reported a 29% revenue growth. There is an improvement in realization. Their margins are back above 20%, expanding by 80 basis points. The question is how much of it is in the price. Valuations have already re-rated. I think Bajaj Auto is now trading at about 26 times forward multiple, while its peer Hero MotoCorp is at 17, 18 times. So would you bet on Bajaj Auto for more upside from here?
Yeah, Rima, I think you rightly highlighted we have been positive on the two-wheeler space in the entire auto pack. We had in terms of pecking order, we kind of liked the two-wheeler space for last couple of quarters, and that has clearly played out well. In terms of results, Bajaj Auto has been consistently delivering strong results quarter after quarter. Even this quarter, the numbers were much higher than expectations, driven by growth as well as improvement in the ASPs, the average selling prices. And we expect the outperformance from Bajaj Auto in the domestic segment to continue, led by a healthy pipeline, new launch pipeline, as the focus would remain on the domestic markets, given that exports continues to remain uncertain given the global geopolitical headwinds in some of its key markets. So coming to valuation, yes, if you look at 1 year forward, it is at 28 times based on our estimates, and on FY26 also, the valuations are at 24, 25 times. So definitely a lot is in the stock price, but I would believe that on back of this strong performance, plus the outlook by the IMD on the good monsoon this year, the consumer demand reviving the rural demand, two-wheelers would continue to do well. Our preferred pick, purely on based on valuations, would be a Hero MotoCorp, followed by a TVS Motors, which is a larger play on the EVs two-wheeler space, followed by Eicher Motors.